fine. We're comfortable, we're relaxed. Good afternoon, everybody. It's Coffee with Mike. Second time today. I'm kind of excited. I'm here with Adri Meek from Coldwell Banker here in San Juan County.
Hi, guys.
We tried to have her on
Friday. No, Wednesday.
Today's Friday. I had to try to have you on Wednesday, and I was not TikTok famous enough to do the picture-in-picture because you had a sick one at home.
I did.
So it was. He
was trying to explain it through me through the phone, you guys, and I went live on my own TikTok, and I was like, no, I don't want to go live.
She's already started. She's already been on.
No, I ended it real quick because I was like, it started, and I was like, do you see Mike? Nope. And I was like, no.
We're learning together. We're getting it figured out.
But I don't get embarrassed easily, so it's fine.
Perfect. Well, I'm happy that you're actually available and we can talk.
Me too.
I wanted to get you on here, and you're newer. You've been doing this since May of last year.
Correct.
So we haven't gone a full year yet.
No.
How has it been?
It's been great.
Okay.
I got my license in May. I closed my first deal August, and then I had another one in September. Okay. And then it was pretty slow, but I was kind of prepping, just hitting the ground running, getting prepared for this year.
Season, right?
Yes, because they say, spring is busy.
Right.
So I was kind of preparing for that, trying to get my social media up and running because nowadays you have to be a content creator. So I've been working on that. Trying to. So I've been doing that, and then I got my first ever referral.
Congratulations!
It's exciting, you guys, and it was so I'm doing that one now. We close on Tuesday.
Okay.
But this has probably been my hardest deal yet.
Really?
Yes.
So what made this one different and difficult compared to the ones that you've already done last year?
So the difference is the lending side of it, which I love the lender we use. Love the way he does business. Love the way he communicates.
Wasn't me, but we'll keep on. We'll not be hurt from that.
However, it was his system. Okay. They got a completely new system, and he couldn't help it. Okay. It was just something that completely was out of everybody's hands. Well, we had to transfer everything from system A to system B. When I say we, I mean his company.
Sure.
And so we had to redo everything as far as like send this email, get the reappraisal, get the appraisal transferred to here and this. And so it was just stressful for everybody because the closing date had to change multiple times and people don't like that.
Right.
So it was just one thing after the other. But you guys, we're getting to the closing table, and I just kept telling us as realtors and lenders, I feel like we have to put out these fires before you guys know about it.
Sure. And
I feel like it's important. I do tell my clients, hey, this is what's going on. But at the same time, if I can put out that fire before you even know about it, I'm going to try to do it because it's just save them the stress. I'll bear it on myself.
Sure.
So that was it. It was just stressful lending side of it, but it's not bad. That does not make, I will still continue to do business with this lender. Love this lender. He's a great guy.
Sure.
All the things.
Okay. That makes sense. I mean, you're going through the transaction, and this big thing comes up that can derail and move your closing date, but you're taking on the stress, and then you're just delivering information to your clients so that way they can more easily feel good about the deal.
Yes.
Now, I mean, as far as moving the closing date, in your opinion, and I've got different opinions from all different realtors, but in your opinion, is it a big deal to move the closing date? Is it not? Moving the closing date seems like a hot button issue with
absolutely. To me personally, I feel like it makes me look bad.
Okay.
And it was nobody's fault. In this case, it was really nobody's fault. It just happened that, system updates, technology, gotta love it, 2026. Okay. But absolutely, this was the first time I've ever had to extend a closing date, and I didn't like it because not only is the seller frustrated, I have my buyers frustrated, everybody, and who's the punching bag?
Okay.
The realtors. Yes. And sometimes you guys are too.
Sure.
And so, but instead of reacting to that, you kind of have to figure out how to diffuse the fire and how to just, hey, I'm here. Use me as your punching bag. I'm here to support you and help you. I understand you need to tell your boss ahead of time that you have to take off this day. Okay. I wish I can give you a specific day, but I cannot. And it was hard to explain that without putting the blame on anybody. And it was just like, hey, it's nobody's fault. We'll figure it out. But no, absolutely. I feel like if you stick to a closing date, you absolutely try to close on or before that day, no matter what. That's just my opinion. You guys can disagree with me, but I feel like when closing is extended, we didn't do our job well enough. That's just my personal opinion.
Well, and that brings up to a point. You said that a system shifted and a system changed, and they had to move things out. Now, was it a substantial change? Like, was it like a month?
Oh, it's did a whole system change. So they went,
But how long did it extend? Was it a month or was it?
Oh, no. We were supposed to close on Thursday. Yesterday, it's just a Tuesday. And I get like with loans and things like that, you have to submit them. And sometimes that can take some time. And I get that. But I feel like if we do our due diligence, why are you looking at me like
no,
this?
I'm creating questions in my head. I'm listening because, there's a perspective, in a month, right? If you extend for a month, obviously that sounds horrible.
But a few days isn't bad, in your opinion?
A few days, depending on what happened, especially depending on when. Like if I find out at the very beginning of the transaction that I need to add 2 days to my timeline, generally that's probably going to be well received. It's like, hey, we just shifted into a new system and I needed to move things out by 2 days. Don't think that's going to be a big deal. But if I say, hey, I need 30 days added to the end of the transaction, even though we just started 2 days into the transaction, that doesn't seem very great.
Right.
So when did you guys receive that information about the extension?
Like 2 weeks ago. Oh, no, extension just this last week because we were trying to make it work. We were trying, and my poor lender was working his tail off trying to make it possible. But it's just as far as submitting paperwork and getting the approval from, is it underwriting? I'm trying to, you know what I mean? And then submitting this. And it was just one thing after another. So realistically, he was like, hey, instead of changing the date, let's just set it for Tuesday. And I was like, great, let's do it.
Okay.
You know what I mean? Rather than keep changing it. So it wasn't that we had to keep changing it, it's that we just didn't have a date.
Okay. So you didn't have a strong time frame of when it was actually going to happen. You're like, we just need to create a window. And he says, you know what? We're just going to say this date right here. So that way, even if we're done early, we know exactly.
Oh, absolutely. Because it was just changing like, well, we're set to close Thursday, but let's try for Friday, but if not Monday. And I said, no, just do Tuesday. Okay. Let's just do Tuesday so everybody can give their boss advance.
Right.
Nobody's stressed out. Let's make sure we can get them to the closing table.
Right.
And there's no more stress, tears, fighting, none of that stuff.
Okay.
So I feel like that was a great plan. And
it sounds like, and that's the thing. You took control of the situation and you made it work for everybody.
Yes.
And you didn't put extra pressure on the process because, it's like, hey, we're shooting for Monday.
Right.
Are we going to make Monday? You know
exactly.
what? Let's commit to Tuesday and have that window to work through all the other details and all the other problems. Because there's so many people that are involved with the transaction, not just the realtors, the buyers, the sellers, and the lender.
Right.
You've got title companies, and then you just mentioned the bosses and the employers. You get out in other places where people are moving from city to city. They've got movers.
Right.
There's so many extra people involved. Insurance companies. You haven't run into that where I don't know if you run into it, where we've said, hey, we have a closing date here, and then a delay happens, and then nobody notifies the insurance company.
No, I have not run into that, and I hope I don't run into that.
Extensions can happen.
I know, but I try to avoid them at any cost. But I get it. They do happen. But I'm just like, if we can avoid it, let's avoid it. And it's real estate. So, I mean, it
says up and down constantly. I do remember us talking and you had asked or needed clarification or information to buyers about down payment assistance programs and affordability. What were you looking for in that question?
Well, when people reach out to me, they ask like, hey, typically what the question is what would my down payment be on this house?
Okay.
And my answer automatically wants to be like, well, hey, New Mexico offers some of the greatest down payment assistance programs to help with that. Okay. So technically you wouldn't need a down payment.
Okay.
And so I just want to educate myself more, even though I know it's the lender side of it, but I want to know, that's why I asked you, like, how would I word that to them to where I'm not giving them false information, misleading you guys, but to where I can kind of not educate you, but kind of get you familiar with it before I give them to you. So that way they know what they're asking.
Okay.
I mean, and I know some of you guys might disagree with me. So that way you're like, hey, no, let me just take reign on that and be like, I will explain it.
Okay.
But I feel like they should just know their options, their choices, and what to ask for, rather than get off the phone and be like, oh, I should have asked this question and this, because I do that all the time. I do that myself all the time. So that's what I get all the time is just, how much of a down payment do I need for this?
Right.
How much would my monthly payment be?
Okay.
And at that point, I'm like, I don't know what your monthly payment will be. Like, have you reached out to a lender?
Right.
And they're like, no, I just want to know what my payment will be. I was like, I don't know.
And that's the thing. People go to realtors first because they look at the house, they fall in love with the idea of the house, and all of a sudden they start thinking the numbers. And you're like, I'm just the person that gets you connected with the house.
Right.
And you want to educate them. But the hang up in that becomes you don't want to give them false information. You don't want to give them bad expectations. Even if the math makes sense, they may not qualify for down payment assistance, or they may not be able to get the USDA style loans.
Mm-hmm.
So it's a really fine line that realtors have to, because you guys do have that information. We as lenders are like, hey, did you know about this program, about this program? Because we want to make you guys more experienced or, more knowledgeable to where you can hear enough and have enough knowledge to, hear what people are saying and say, these all sound great. You might want to try this, but let me get you connected with the expert.
Right.
And it's hard. It's a hard line to balance, because a lot of the data, but then at the same time you're like, ooh, I don't want to give them too many directions to follow or false expectations.
Exactly.
Because you may not know if they may not qualify at all.
100%.
And then you might look like the bad guy. And so it's a weird delicate balance. And a lot of realtors and lenders, a lot of people talk about that conversation and they use the phrase, stay in your lane so that way you protect yourself and also protecting your buyer's expectations. Because if I start talking about negotiating closing costs, I'm in trouble. Like I know what closing costs in general could be, and I know what my numbers are going to be. But telling the buyer what to expect, I need to make sure I go, well, if the seller is going to pay for anything, we may have this, but let me talk with your realtor and we can work something out. So yeah, when it comes to, discussing things with borrowers, even sellers, making sure we have enough information to be able to say, hey, that sounds right. Let's go confirm it with somebody. That's the hard part of our job, because there's so many variables out there. Who knows what we need to do?
No, I agree. And it's important just to make sure that, I educate myself from all. That's why, whenever you're like, hey, let's drop, I'm like, yes, let's do it, because I have questions. I know, sorry, the microphone.
You're fine.
Sorry, guys. Testing 1, 2, 3. I'm just kidding. I also talk with Daniel and I'm like, hey, and I will ask all these questions. So I make sure I'm educated for you guys. Because that's the last thing I want to do is look like I'm uneducated, especially being new to the game.
Right.
I want to make sure that I educate myself even more so that way I can share my knowledge and be like, hey, ask about this. And so that's why I just want to become familiar with it.
Right.
So as far as, let me ask you this, and I think I've asked you that before, as far as credit score.
Yep.
Is that something that I should be like, hey, if you have a credit score over XYZ, or do I not even?
I wouldn't.
Nope. Just be like, hey, here's a lender, or I'm going to have my lender reach out to you.
And that's the thing is, each lender has their own overlay. So even though you might know the rules and regulations for all the guidelines, each lender that they may get connected with, or each lender that may work for them, they may not have that program that's available. For a long time, we were pushing and discussing how VA doesn't have a bottom line credit score. That being said, almost every lender has a bottom line credit score for their VA loans. And so with that conversation, you get connected with some of these bigger box places like Veterans United, there's another one that I never think of, USAA, I think. Their bottom line VA credit score is a 620, maybe a 600.
Okay.
But that's not true. VA will let you go all the way down to no credit score, that they may have a terrible credit score. Getting that approved, though, that's the other part of it, is you don't want to get false hopes either. And getting those kind of credit scores approved is a bigger conversation. So when you're hearing things about credit score or people don't have a down payment, it would be best to say, hey, there's options available. We need to find the lender that can give you those programs that'll work for your situation.
Right. Okay.
And that's where you give them, a plethora of people that who have those. And that's the other part, is you guys are required to, make sure you give options. You're not steering to anybody. So you got to know your lender partners. Like we have to know our realtor partners, our insurance partners. It's like, hey, I know all these people and they are great options. Good luck on picking one.
Yes.
And then, I can give them tips on different comparisons. Like insurance is my favorite, because I used to kind of guess what insurance would be, and I was pretty close to my estimates. And then I'd say, hey, these 3 people that I usually send business to, they're some of the best options out there, not just for price, but also for the service. Well, in the last couple of years, insurance has gone crazy. So I can't even predict what insurance is going to be on properties anymore. So I tell people, hey, go get 3 quotes from the insurance companies you feel comfortable with. We can look at them together and discuss and compare them, so that way you can kind of see the comparisons.
Okay.
And so that can help with a couple of options. So same thing with, your lender partners. You're like, hey, I've got these 3 that are out there. Did you talk to all of them? Did they tell you what options they have? The problem is a lot of people these days, and a lot of the younger people, are so shy to
Okay.
talk to people. Like they don't want to do a lot of in-person to in-person.
Yes, that's why I always say the hardest part is reaching out.
And that's difficult because I've got a text from somebody who I got introduced by a realtor yesterday. I reached out and said, hey, let me know when you can chat. He didn't respond until about 20 minutes ago. I'm
Poor
like,
thing.
you really don't want to talk to me. Like, I get it. Like face to face.
And it can be very intimidating.
It can. And so we have to be the professionals, but at the same time, we're humans. So we can, actually talk like humans. And
so can AI, unfortunately.
It can, but it's not as cool. And it doesn't have all of this to go with it. So,
Well, I hope that works out great. But no, I agree. I feel like people reaching out is the hardest part, and they can be embarrassed, and they can be, you know what I mean?
Yeah.
Timid, whatever the case may be. Not everybody is comfortable with,
Well, and I think a lot of times they're not sure if they want to move forward with the whole thing. And so with that, they don't want to commit. They don't want to get their credit score shotgunned out there. They don't want their information out on the interwebs getting stolen. So that's why I think a phone conversation is probably the best start, because then you can have that detailed interview just up front about what they're looking for, what they're up against, and figuring out what might work for them. So it really is, when it comes to, if they're bringing you information, you can say, look, it sounds like something that could work, but I'm not that licensed individual. So let me get you connected with a couple of people and we can get those things answered for you. And then, the qualified individuals you talk to, they'll take care of your customer. That's what I would suggest for realtors.
Yes. Okay, good. No, that's good to know. Just because I'm like, I don't know what I'm not going to sit here and try to tell you what your monthly payment will be. What I usually say is I'm like, give your lender your number that you want as a monthly payment, like what you can afford, even if you were to like lose your job or whatever the case may be. You just have to be, you know what I mean? That's why I always just make sure that they, you know what I mean? Because automatically people are like, oh, it's approved for $275. Let's get this house for $274.9. And it's like, no, you don't want to do that. You want to make sure you can afford your monthly payment first. So I always just kind of reiterate that.
Well, and that's another thing that I'm curious about for a lot of the realtors that are out there. They hear the pre-qualification amount, or they want that pre-qualification amount so they can go and shop in those price ranges. Are you, and you may not have had enough situations where people are getting sticker shock, but where they're pre-qualified, but then they find out the monthly payment. Have you run into that enough, or have you seen that recently where?
I feel like whenever I first meet with new clients, I sit down and I say, what you were pre-approved for, what is your criteria, bedrooms, bathrooms, do you want a yard, do you want a garage, things like that. And then that's one of the questions I ask is what's a comfortable monthly payment? And I even bring up like groceries, utilities, cell phone bill, gas, what is that payment? And before we even start looking at houses, I get in touch with the lender and I'm like, hey, this is the monthly payment that they can afford. Tell me what does that price range look like? Then we go. And so I only did that with my last one because my other two, it was kind of a lot of back and forth.
Yeah.
And so that's something that I've learned is just to get that monthly payment right off the bat.
Right.
So you're not wasting anybody's time.
Right.
Like looking at
at the last minute.
Last thing I want to do is show somebody a house they fall in love with and then they can't afford it.
Yeah.
Like, they're approved. It's in that range, but so I've learned that I ask, what's that monthly payment? And maybe I'm wrong, but that's just what I do.
It's been a common thing for me for the last couple of years because that monthly payment really does create that price range and that loan amount for us. And it kind of sets the expectations, because if they tell me, well, I want a house for $450,000, in my quick math, I'm like, yeah, that's probably a good $3,800 payment. And they're floored. They're like, there's no way. Well, what payment can you qualify for? Or what are you comfortable with paying per month? And they'll give me like a $2,000 payment. Okay, well, that's going to be a closer price range of $260, $280. What's your down payment? And it opens up that conversation to know their financial situation. And then surprisingly enough, a lot of times these people who came in with a idea for a purchase price of $400, they can qualify for it. Like on paper, I could get them that loan. But like you said, they need to be able to afford groceries. They need to be able to go on the trips.
Groceries in this economy? Oh my gosh.
So bad. It's so bad. I may have to become a part-time farmer.
I don't have a green thumb. I tried to grow squash one time, you guys. It was terrible.
You didn't grow squash? You can't grow squash?
I did, but they were too big. Like there's a point where you got to pull them off.
Why didn't you pull them off? They're squash.
Because I didn't know. I even grew a watermelon. I tried to do a pumpkin.
That means you can grow it. You just need.
It was by accident, honestly. I think
you dropped a squash and it grew in the. You're like, oh, look what I did.
No, I was like, oh my god, and I was pregnant then, and I was like, the little bugs and stuff freaked me out. So I was like, can I eat this? And I was like, no. So I was like giving them all like these plants or like these vegetables that I was growing. I was like giving them away. I think I kept the tomatoes, but I was like, I don't want them.
See, tomatoes. I mean, that's great. That's
Jalapenos and strawberries. So maybe you know what?
Strawberries.
Maybe. Oh,
you got strawberries?
I have proof.
I can't ever grow strawberries.
I have okay then.
Not here.
Maybe I need to give it another try.
Give it a shot. If you can grow strawberries, that's not a bad crop. That's actually really good.
No. Okay, then I didn't do terrible.
You grew something and you just let it grow too big. That's fine.
But then there was some things that like cucumbers. I couldn't grow cucumbers. I did jalapenos though. Yeah.
Okay.
I don't know what I was doing wrong, so we'll see.
Cucumbers, jalapenos, tomatoes. You got a salsa, so we're good.
And I didn't even make salsa, you guys. What kind of Mexican
You live
am
in
I?
New Mexico and you didn't even make any
know,
pico,
I
any
know.
salsa. This is terrible. Other thoughts? What are questions people aren't asking, or what answers are you not getting from the industry? Anything that comes to mind for you?
I feel like a lot of people feel like they need 20% down to buy a house. And I just feel like as far as being educated, I feel like they need to know that's not true. That's completely false. I, as a realtor, even thought conventional loans had to have a higher down payment. Or like, yeah. And you were like, no, absolutely not.
No.
And so I feel like that's something that's not being shared is you don't need 20%. There's never going to be a great market. So stop waiting for the right time. Just go in full force. And I don't know what else. I feel like there's so many things. As far as me, what am I not getting? It's that next. Oh, you're grabbing your pen. I don't know.
No, I'm writing it down so I can come back to it. They're great.
I don't know. I don't know what I'm getting. Okay, so what am I not getting as far as like from my buyers, from my clients, from potential buyers, from lenders, like from what?
Anything in the industry. You come to work and you're like, oh, I just wish everybody would know this, or I wish everybody would start doing this to make life easier in the industry or make life better. And it just when we lift, everybody lifts.
Right. I would say being a stickler for deadlines. I feel like nobody really pays attention to those.
Okay.
And then once it's extended, like if you go over a deadline, it's like your contract is void. If you think about it legally.
Sure.
And I feel like a lot of the realtors they don't worry about deadlines that much. To whereas here at Coldwell, we are trained. Like, no, deadlines are a big deal.
Right.
And I'm not going to lie, my very first deal, I went past a deadline and Shelby was like, no, you know better. And I tell you what, I will never miss a deadline again. Cause I was like, oh my gosh.
You get burned on it before and you never.
Yeah, it was like lesson learned. But as far as, I don't know, I feel like I'm still too new to kind of put my 2 cents in a little bit. However, I feel like I'm still learning and retaining all this knowledge from everybody.
And that's the best part of it is that you don't have any bad habits, you don't have any bad experiences or bad training. And that's a lot of some of these concerns. Like people just assume things because it's just almost generational. Your down payment's 20%. You know, you got a ton of money. No, you don't have to have a down payment of 20%.
And I feel like a lot of people get down payment and closing cost mixed up.
They do.
And I feel like, no, it's completely different.
Do. Yeah.
And so I feel like that could be something we can explain better.
Well, yeah, to your point, down payment, when people say, well, what's a down payment? I'm like, you can go from 0 to however much of you have available, which could be 50%. As far as what you qualify with, that's what we have to figure out. So if we're looking at a conventional situation, the minimum down payment or the minimum requirement would be around 3% for a first-time home buyer, which people are like, there's no way. Absolutely. A lot of times I would say your average is going to be about 5% for most situations on conventional. But that even being said could be wrong for certain customers. We have to look at all their options. And that's for a primary residence. That's not for an investment property.
Right.
Investment properties are completely different. Then you jump into the government loans, which is FHA, USDA, VA, and they have all their variations. FHA, they're 3.5% down. USDA, no percent down. VA, no percent down.
And something I learned is the 3%, depending on what your income is, the 3% could be covered, but you still have to come up with the 0.5. Is that something?
That's part of the down payment assistance programs.
The MFA.
And that's where,
Okay.
that's where learning the different programs and having your lender kind of explain the details is super helpful, because you can get down payment assistance, but it doesn't cover all of it. Or you can get more than enough to cover the down payment, and then you have this extra. And a lot of people are like, oh, then I'll get that cash back. No, you don't. I'm going to say almost never, so that way I don't get in trouble legally. But it's one of those things, you can't really buy a house and get money back. There's certain situations where money kind of gets moved around on the paperwork and you happen to get your earnest money check back, or something comes in as a credit. But overall, you've got to expect to come in with something, or you've kind of made it a zero number. And now again, down payments, that first conversation of, okay, you have a required down payment for this loan program we fit you in. Then to your point, we have closing costs. Closing costs are just everybody who gets paid in the transaction. And that's everybody. That's lenders, that's title company, that's insurance, that's inspectors, anything that can be a part of the transaction itself. And that could bring us to the realtors and their commission. We've got buyers brokers, we've got listing brokers. They have their commissions that are part of the transaction as well. And so we want to have that big snapshot of, here's what the closing costs could be. And we have a big bucket of bills that we have to pay. Those are our closing costs. Who pays for that? That's where the realtors negotiate that and help us out. And they see if maybe the seller can pay for it, or if the buyer has money for closing costs, they can cover some of those closing costs. And that's part of the negotiation when the contract goes out. And people aren't prepared for it. And I asked that question. I said, what do you have available for the cash at the closing table? Not down payment, not anything other than what do you have available to help with the transaction. And if people are budgeting and they've been budgeting for that 20% down, I'm like, cool, well, you don't need the 20% down, but you have enough cash, and it can make you dangerous as a buyer. You can go in and be like, I can cover all my closing costs and my down payment. Seller, this is a great deal.
It makes it a strong offer.
It really does.
But I think here in New Mexico, it's very typical for a seller to pay for closing costs.
It is. Cash at closing, it's a big conversation. Cash at closing is a huge hurdle for people. And it's part of the housing affordability where people can afford the monthly payment. They're like, I've got this. But month to month, they've been paying the rent, which is almost as much as their mortgage. And they don't have any extra to have saved up for the 3%, the 5%. So it's that big hurdle of the cash at closing that they need, which is where down payment assistance programs can help. It's where closing costs from the seller can help. There's a lot of opportunities we can make happen there. And that brings us to your next point, right? People are trying to save and they just can't save and save and save. They can afford it. Everything's perfect on their credit profile. They've been making the same payment, but they just don't have the down payment. They don't feel like it's a good time to get in, or it's too expensive to get in. Why is it never a bad time to get into the industry or into the market?
Well, if you're waiting for interest rate wise, like interest rate wise, say that 5 times fast.
No.
So I feel like, what is it at now? 5?
It's a range. We actually went up today as a market.
We're not going to talk about it no more.
Interest rates are not pretty. They've been, they were at the lowest in the last 3 years for the last week and a half.
Yes.
And starting on Wednesday, they started to go up.
Okay.
So we have had a boost in the interest rates, but that's the thing. They're not skyrocketing. They're still within reason. If anybody called my office, I'd say it's between 6% and 8%, depending on the loan that you're getting. We just need to look at it.
Right.
You can go online. You can probably Google it. You can go find Fannie Mae, Freddie Mac averages. But overall, the rates are still much more reasonable than they have been for the last 3 years.
Well, see, so you just made the perfect point. Interest rates were at the best they've ever been the last 3 years.
Right.
But that lasted how long?
That lasted for 3 days.
There you go. 3 days. So
they're still great though.
They are. And so interest rates, you're not ever going to get, you know what I mean? Whatever you want. What is it? Like 1.5? People are unrealistic.
We don't want the 3%, because if we have 3% as an economy,
that's terrible.
Something's bad.
Yes, exactly. And so because New Mexico is such a great state that offers these down payment assistance programs, I feel like it's perfect. I mean, and there's different ones. There's the MFA, there's the USDA, there is the HUD 184, like you said. And I'm learning all these things, you guys. I'm educating myself more for you guys. And I just feel like it's the perfect time. You know what I mean? I mean, even financially, if you feel like you're ready financially, then that's all that matters. Everything else, it'll work itself out the way it's meant to be. And that's what it is if you feel like you're financially ready. Meaning, okay, I'd rather pay $1,800 on my mortgage payment rather than rent.
Sure.
I can do that.
Right.
You know what I mean? And even if you feel like your credit isn't there, Mike can help it get there. So don't feel like you're wasting your, and I always would tell like Mike or, you know, any other one, I'm like, I'm sorry if I'm wasting your time. And it's like, no, we're not wasting anybody's time.
Right.
If you're not ready, don't be afraid to reach out because we can get you ready. We can get you there. They can lead you in the right direction on how to increase your credit score, right?
We can work on it. We're meant to be, to a degree, credit consultants. They actually changed that rule recently where lenders should have an idea of where credit needs to go. So I've probably looked over thousands of credit reports, and I've even used. And
I feel like the more you look, the more you learn.
And you know what's keeping people's scores down. You know why people can't get approved in other places. So what we look at is, okay, what can we do to get your score better, or what can we do to just make your entire credit profile better? And a lot comes from people's credit report. You can see their history. You can see how they budget. You can see where they spend their money. And in some situations, they have people who never use credit. And so they don't have a credit report. They don't have a credit score at all. And they feel like, well, because I don't have a credit score, I can't play the game. It's not true. You pay bills still. Everybody pays bills. Everybody pays something once a month, every month, whether it be rent, car, phone, utilities, anything. Of those. So we can use that to create non-traditional credit, histories that can get them into the market and qualify. And it's one of those that, we can definitely point people in the right direction for a lot of stuff. So
I guess I should backtrack then. Even if you don't feel like you're ready financially, I feel like reaching out and getting yourself to, set yourself up for success later. There's nothing wrong with that.
I tell people you don't know what you don't know. So doing a pre-qualification check is not a problem. It's not a stamp of disapproval. You're not being judged. This is where you're at. Now we can create a roadmap to get you where you need to be. Now we can point you in that right direction.
Roadmap.
Yeah. And we use that terminology all the time. Here's your roadmap to get the transaction closed. Here's your roadmap to get to pre-qualification. That's the thing. If you're scared to look at it, don't be. Because the worst that we can say is, well, not right now.
Just not right now.
Exactly. And I've said that for 17 years. It's not a
That's a good slogan. It's not no. It's just not right now.
I'm gonna lie to you and tell you I trademarked that. And then I'm going to run off to the trademark office. But yeah, it really is. It's not the end when you get denied, and everybody feels denied, and they're like, "Oh my god!"
Or they feel defeated, and it's like, "No,
it's almost like rejection."
You're getting started.
Yeah, it's like you're in a great spot.
Yes.
Now do all of this. I will say that I have plenty of colleagues in the industry. None of them locally, actually, but when I get these calls from across the country, and people are like, "Yeah, they told me I didn't qualify, and that was it." I'm like, okay, did they talk to you about your credit report? Yeah, they said it was a 582. Okay, did they tell you what to work on? Because that's really close. Like things are almost where they need to be.
Yeah.
And so we'll do a credit report with them, and we'll go through it. Say, oh yeah, work on this, this, and this. Call me in about a month, and we'll probably be able to do a calculation and see where we're at on things. So there's other places that will deny you and then just move you on because they're really trying to process everybody through. They're just like, no, that's not going to work. Not going to work. Not going to work. And then all of a sudden, I have one. But all these other people who've just been turned away, they're potential customers that we need to take care of.
Yes.
So that's where if you're not getting the service you need out of that, if people aren't, being coached on what direction to go, then, you may need to look at a different lender partner. So
agreed. No, I agree.
Perfect. I'm going to see if I can check some comments. I tried it this morning and I was not good, but I'm going to try to check comments real quick.
I can't see that far. I am so blind.
No, it's teeny tiny here. It's teeny tiny. AI said this. I don't know where did the chats go.
I have no idea.
I got nothing. Nothing.
What are all those?
These are all the people who joined. And they stopped through and said hello. No, I don't have any comments. No, nothing to answer there. So I think we're all good. And I don't think we have any currently live viewers. So we'll just sign off there. And then we'll answer some other questions.
Where does it tell you for live viewers? I just want to know.
I think it's right up here.
Okay.
The participants. So
okay.
I think.
So did anybody send you stickers or anything?
I think I got a one, maybe. I'll have to look. Well,
I guess I could.